So thanks for lending us the armchair, Club Med. We are able to start our session together. Anna, could you please tell us a little bit about Hotel 101? Because I'm not sure everyone knows what it is that you do.
Well, good afternoon, everyone. It's a privilege to be here. I'm the CEO of Hotel 101 Global. Not a lot of people know about us. We're very new in the market. We are listing in the NASDAQ this year. Oh, there we go. We are expanding globally. So we are based out of Singapore, and we are expanding to 25 countries in the next 3 years. We're listing the NASDAQ this year with a very special and unique business model. So there's 3 things I think that are key to our business model. Number 1, we only develop and build one type of room globally. So literally one type of room. So it's complete standardization of the hospitality product across the world. So if you go into a Hotel 101 room, you won't know where you are unless you open the window. You know, voila, I'm in Japan or I'm in Madrid. So it's complete standardization to achieve maximum efficiency in operations. And number 2, we build 5 times more rooms than your typical budget hotel at the budget hotel price. So typical budget hotel is a 100-room key hotel across the world. That's the typical budget hotel select service. We build 500 rooms on average in every property. And this allows us to have a larger floor plate, giving the consumers more amenities. So you will find a gym, swimming pool, all-day dining, 24/7 front desk, business center, function rooms. So it's like having full-service hotel at select service pricing. So those are the 2 key areas that we beat our competitors. But the third key aspect of our business model is we don't own any of the rooms in the end. So just like a hospitality platform that we all know globally, many hospitality platforms offering inventory owned by third parties, the only difference that we do is we create the inventory first to get that consistent one product. So we develop the hotel from the ground up, always a greenfield, to have that 500 rooms, one type of room. Then we sell it to individual unit owners. So many individuals invest in studios today for rental property because especially Asians, we like real estate. So we buy studios, 2 bedrooms, 3 bedrooms without any intention of living there. We just lease it out for yield. That's something, you know, a lot of investors do globally, but we don't necessarily want the headache. You know, we don't want your tenant calling you, oh, the sink is broken, please send someone for the aircon. I mean, people love to buy real estate, but they don't want to manage it. So instead of betting on the residential side of real estate, people can now own, you know, a bite-sized branded hotel chain, 200,000 euros or $250,000. You can own a hotel unit freehold, so you own the condominium title, and we lease it back from you or manage it for you for 50 years or 25 years. We will run it as a hotel, and we do a top-line sharing. So this is very different from your typical traditional apart hotel or condotel type of business model because we give you a revenue share. And we don't guarantee any yields, but 30% of room revenues today for our original investors equate to about 7 to 8% yield, which is pretty good. We only try to beat at least what you would get if you bought residential unit and leased it out yourself, minus the headache of you having to manage it. And we think that with that proposition, banking on owning the property itself, the investors own the unit. It's not a timeshare. It's not a share of a company or a share of a hotel. It's the actual unit itself. We believe this is a very compelling proposition that we've seen more and more demand globally as we expand. Thank you.
Okay, thank you, Anna. So let's jump right into our topic, which is about investment climate. Starting with you, Sami. What is your assessment of the opportunities of investment on the European market?
So I'm Sami Mendil. I'm head of global real estate at B&B Hotels. Just to start with the investment climate on the hotel asset type, I suggest we start with the operating performances of the hotel and give a panorama of how these performed in the recent year. So globally, there has been a very good performance of the hotels in terms of the performance, the revenues, and the margin in 2024. That was driven by a very high demand and also a very good level of revenues and the RevPAR that have globally increased by 4% last year. And this obviously, on the demand side, it has been very important for the urban hotels that have shown a very high increase in performances in the last year. And the leisure hotels, leisure-driven hotels or resorts, those had picked up very quickly after COVID and now are normalizing, still increasing, but at a lower pace. In terms of the revenues, as you may know, we are now back at the levels of 2019 in terms of occupancy rate, approximately in all countries. But in recent years, we have seen a tremendous increase in the ADRs. So the ADRs, sorry, and so the RevPAR are much higher. And this obviously is different across the geographies. We are seeing the Asia Pacific lagging a little bit behind by 10% the level of RevPAR of 2019. And in Europe, Middle East, and the Americas, we are seeing a big increase, a double-digit increase in the mid-20 in terms of the RevPAR compared to 2019. So overall, there's a very good performance of the hotel, and this is the underlying of the investment volumes. How does this translate into the investment volumes? Overall, globally, the investment volumes in hotels have been of $60 billion across the globe. And this has shown an increase by about 10% compared to last year. So it's an increase in, and the asset category is showing more appeal to more and more investors. But still, this level of volumes is still quite limited. $60 billion last year to be compared to $100 billion in 2015. So this can be explained by many factors. Obviously, the political atmosphere and the climate that we are all living at the moment, and that highlights new risks for the investors. And obviously also the interest rates. They have still been at a high level throughout the year, last year. It's obviously also different according to the geographies again. For example, the BCE had cut down the rates in mid 2024, and we have seen more capital injected in hotels in the second half of the year, whereas the Fed has decreased their rates later in September, and the impact has been delayed. And so overall, the US has been less invested than expected in terms of investment volumes, whereas Europe and Asia were at a good level, let's say, compared to the 10-year average, I would say.
You haven't talked much about long stay, so maybe Arthur, for Adagio, you are present in 16 countries, if I'm not mistaken, across the globe. In which market do you see the more dynamic investment trends?
Good afternoon, La Croisette. It's a pleasure to be here. So yeah, my name is Arthur. I'm the Chief Development and the Real Estate Officer for Adagio. So as you may know, Adagio is a specialist of extended stay hotel and apart hotel. That means that our targeted guests are staying more than a few nights for a long period and until a year. So yeah, to answer your question, Emmanuel, from a global perspective, yeah, we see that from our cousin Accor that Asia, Middle East, and India are the most dynamic countries for investment in terms of hospitality. And from Europe and North Africa market, clearly Southern Europe is booming, especially Spain and Portugal. We see a lot of opportunities also in Italy. So we believe that it's going to be still the case in 2025. And I'm sure that for long stay as well.
Genel, you're across Europe now, and even maybe soon further. Which are the countries that are the most dynamic?
So Easy Hotel is an hotel operator, but also real estate investor. We have 50 hotels in 11 countries in Europe. And we would like to grow in Europe with an objective to double the size of the company within the next 5 years. As of now, the key markets for us are France and Belgium, Germany and the Netherlands, and Spain and Portugal. If we take the example of France first, I think that we are quite dynamic and we have a really strong pipeline because we are able to acquire the real estate ourselves. And I would say this is quite a strength right now. So we are able to acquire properties, development or existing properties in all the main cities. In Germany, RevPAR has increased between 23 and 24 by approx 7%, and we hired a head of development covering this market because I think that as a real estate owner, we will see some opportunities, mainly with office conversion, and we have a quite strong track record in terms of office conversion in the UK, and we are studying a lot of opportunities now. Then if we, in Spain and Portugal, this is definitely a strong market. RevPAR increased by plus 12% for the economic market. And we are opening this year in Spain 3 new properties in Barcelona, Madrid and Valencia, doubling the size of the country for us. So really, Spain is a strong market. We have been able to secure financing for project development, meaning project under development with a local bank, Caixa, with really good interest rate, financing approx at 60% loan to cost. So this is a strong market in terms of performances, and we see a lot of potential for Easy Hotel there.
Okay. Hélène, Genail mentioned the French market, saying that it's anyways very dynamic. What do you think as you have a more focused portfolio on that territory?
So just to say a few words about On Hotel, we are an hotel operator. You're right, we are already present in France with 50 hotels and a few hotels in Europe, Spain and Belgium, but mainly France. This is our key market for 25 years now. And I can only join Sami on the activity, the touristic activity especially. It was really great in 2024. And I think we had a huge change during the COVID, which is the home office, which literally changed the thing for a lot of real estate segment, but also for us hospitality, with a strong development of the leisure market. And that's what we see in France, which is a really strong brand for tourism.
Okay. Anna, you being born in Asia, looking at us from another side of the planet, what is your assessment of the European markets and which destination are the most interesting to your point of view?
So Europe is very interesting for us. We've had a very good success, recent success with our launch of Hotel 101 Madrid. So it's actually our first hotel in Europe. It is a 680-room hotel. And, you know, we've been meeting with a lot of potential joint venture partners across Europe and Latin America and Middle East. And it seems like in Europe, there's a lot of demand for something new. And I think that's what a lot of landowners and developers in the different European countries are looking for, you know, in a very challenging last few years in terms of, you know, high interest rates and you know, weak office demand, and in some cases even oversupply in residential has caused a lot of, you know, funds, a lot of property owners to look at, you know, a different aspect when they would usually only just do office or they'll just do residential. They love hospitality. Hospitality, I think, has bounced back, faster than a lot of other aspects. And so there's a lot of demand for something new in hospitality. And what Hotel 101 can offer is the ability for these landowners or developers to monetize their assets quickly because we sell the units. And so we expand three ways. We have our own balance sheet, so we do direct development, 100% owned by us. We do joint venture partners with landowners or sometimes 50-50 with developers. It depends. And also we're doing franchising. But most of the time we see a lot of people stuck with assets in very key areas, especially in the last few years with high interest rates, not able to pursue the projects, where once they had building permits for maybe an office or a residential, they put it on pause a lot of times with the parking already in the basement. Yeah. And I mean, how many stories have we heard? And they're looking for yield, right? They're looking to monetize their asset in a challenging environment. And I think the ability to partner with us and to sell, we pre-sell during the construction period, and most of the time we sell out all the units even before the hotel opens. And this allows a lot of landowners to be able to monetize their asset with us, and then we come in to operate after.
Arthur, Sami, BNBL and Adagio not being a new brand, because Anna mentioned the need for something new. How do you manage to remain attractive for your partners?
For those who don't know BNB, we are economic to mid-scale hotel brands, and we have almost 900 hotels across the globe. We are well represented in continental Europe, and we are now tapping into two new markets for us, the UK, where we wish to grow very quickly. We have now flagged 6 assets in 2024. And the US through Florida, and we have now 4 assets and 4 hotels there. So to remain attractive, to answer your question, what we offer to our end user and the guests is always the same promise that we make to them, is the best value for money. So it's a very efficient hotel use, and we are seeing 55% corporates using our hotels, and 45% leisure demand coming to our hotel. And the promise is very easy. You probably won't find a fancy restaurant at a B&B, but you will have a comfortable mattress, a good and generous breakfast, a nice decoration, and a warm welcome. And that's pretty much it. And this is why we have a very efficient model in terms of attractiveness to the investors, because on the contrary of Easy Hotel, we are not investing in the real estate. Among the almost 900 hotels that we have 300 and more partners. Some of them are the biggest institutional investors, but it can also be a private investor that owns one hotel, and we do leases, which is also very, very differentiating in terms of the yield that we provide and the secure cash flow that we provide to our investors.
Yeah. Arthur.
So Adagio, just to give you a global picture, Adagio is a joint venture, 50-50 in between Accor and Pierre et Vacances Center Parc. That means that we are definitely attractive for our partner, because of, first of all, we benefit from the delivery system of Accor all. So from a distribution perspective, yes, we are very attractive, and we are able to fill the hotel easily with this distribution system. Secondly, we are very flexible. I mean, we've got 3 brands: Adagio Access, which is the 3-star brand. We've got Adagio Original, the 4-star brand. And then we've got Adagio Premium and Luxury brand. So we cover the full market and the full scope. And then we are providing different kind of contract. I mean, depending on the location and the partner, we can adjust our offer with a franchise agreement, hotel management agreement. We also do some leases, and then we are also looking for co-invest. to prove that we believe in our business model. So this is something which is obviously doing very well. We've got today 130 hotels open across 16 countries, and we plan to achieve more than 200 in the next years. So clearly, we believe in the model and the metrics. I mean, the GOP margin and the EBITDA that we've got and we serve to our partner is just super high and a bit higher than compared to the hotel market, the norm.
When you say super high, what do you mean? Because
I mean
super
that,
high.
No, I mean that in the total portfolio, we are achieving more than 50% GOP margin. And on the best performer, we are achieving 60% GOP margin. So, yeah, it's more or less, I would say, 10% above the usual metrics of the hotel business.
Genaël, do you want to add something about those topic of being still relevant and attractive?
Yes, so the key focus for us is to remain an affordable brand. I would say we are the antithesis maybe of lifestyle hotel. What we want to do is to provide the best room and the best comfort for our guests in a compact room, being approximately around 12 square meters in France. And on top of that, we want the hotel to be low carbon. So a night at Easy Hotel represents 1.9 kilogram of CO2 emission per night. Positioning ourselves, I would say around 66% lower than mid-scale hotel and 30% lower than 2-3-star hotel, and we are able to do that because we have worked a lot on materials we are using in the room to have a low carbon room. Of course, the rooms are compact, so frugality is important in decarbonization. The lowest square meter you are using, the best you are in terms of decarbonization. So it's also important for us and for all the stakeholders, I would say, financial partners, shareholders, but also the guests, to be able to have this figure, and this is something on which we are working a lot. So affordable room in a compact room, but also low carbon rooms.
Okay, so low carbon is one of your differentiation among the others. Hélène, you are working with brands. You are choosing brands for the hotels you're operating. Does that topic of CSR and the proposition of the brand enter into your choice upon all the finest performances you're expecting?
We are not working a lot with brands. We invest in location, and then we create the product for the location. It can be with brands, but we also create a lot of boutique concepts that are tailor-made for the city center of French cities. This is more our DNA at ON Hotel.
Okay. If we talk about your partners, when you need investors, not when you develop by yourself, have you seen changes? We've been talking this morning of before COVID, after COVID. Sami, you were talking of 2019, 2024. Have you seen changes in the last year regarding the customer mix of your partners, and what kind?
Yeah. Just to go back to my previous conversation about the investment volumes, and to make a link with what you were saying, the typologies of investors in hotel, the lion's share is for private equity. Then we see high net worth individual and REITs that have shown a tremendous increase in terms of the volume invested last year. And in our portfolio, we are seeing the same kind of shift actually. We see more and more institutional investors interested in our CSR positioning as well, but also in terms of the security and the covenant that we can provide. So those institutional investors looking for long-term cash flow are really our partners, and we have closed 124 hotels last year. So among those, two big portfolios, and that will illustrate a little bit the variety of investors that we can see. On the one side, there was Swiss Life Asset Management, who invested in a 21 EB's portfolio that we bought and flagged BNB. They were looking for a core investment with a core return. And on the other side, we have partnered with a BC partner last year on a 30 EB's portfolio again that we flagged BNB. And they were looking for value add. And that could be possible through the repositioning with our brand and the operational added value that we could bring, but also on the real estate. So the variety is very big. And we can say that we are seeing more and more retail funds also interested in our proposal because of the good yields you can provide with hotels in general, especially compared to other real estate asset types.
Arthur, do you want to add something on that?
So yeah, due to the fact that we are offering a lot of different contracts, we are also facing different kind of investors. So just to answer your question, Emmanuel, before COVID, most of our deal was leases with institutional partner. But from the COVID, the market has changed, and especially due to the interest rates, which is booming, the inflation, etc., yields on lease are more and more hard to make a good equation for the investors. So long story short, we see more and more private equity funds to invest under HMAs, and also we are seeing a lot of family offices which are investing, and they are looking for franchise. So I think the asset light, due to the interest rates, is today one of the best mode to develop.
So, Sami, you mentioned private equity, Arthur, family offices. Hélène, France is a specific market on those topics of individual investments. And what about your partners and the people you're working with to develop your hotels on that topic?
On hotel side, we actually have our own investment fund, so we are raising money in order to invest in the hotel we manage and create value for our investors. But to answer your question about the market, I don't know if it's a French specificity, but what I can say about France is that the total volume of transaction last year was 2.7 billion euro, and 25% was the private investors. So it's quite an important volume. And those 700 millions, it was essentially in Paris. So those investors are clearly doing the Paris market, especially transaction between 10 and 50 million. After 50 or 60 million euros, it's more the value-added fund or institutional that are on this big deal. But on the 10 to 50 million, it's done. The market is private investor, and they are fixing the price with their own view, which is Paris is a safe, very secure investment. Hotel, it's a tangible asset. You understand it. You already have an experience as a guest, and you can invite friends and family as well. And finally, you also have fiscal advantages that make them be ready to pay more than other investors for those kind of assets.
We now have in France fiscal advantages when you're investing in the hospitality industry. We're not sure it's going to last. So this is a little call on that topic if we want the hospitality market to be.
Clearly, it could slow the volume of investment of those kind of assets. We have seen that at the end of 2024, it was like a stop on a lot of deals with the uncertainties on the fiscal law, 150 au better for the one who knows. But I think it will still be an interesting investment for private investor for the two first reasons, the very secure investment and the tangible and understandable assets.
Anna, you share, I guess, our other guest's view. you coming to Europe, what are the green flags and the red flags you're looking at to choose to do a deal or at least to try to develop a new property?
I think globally, it's very, very similar. I think number one, we need the scale. Trying to build 500 rooms in Paris would be next to impossible. So we always have to position where it is convenient for guests. So we're by the metro, usually, you know, in a new area, maybe close to the airport, somewhere in the fringe, somewhere near the expo or convention center. Take, for example, our hotel in Madrid is beside the airport, beside IFEMA, the largest convention complex. Bonus is it's on the Formula One track. So that's just a bonus. But similarly, we're not in the center of Madrid, but we are across the metro station. You can be in the center in 15 minutes. I think with that type of convenience, given the value that we offer for the rooms, 150 euros, 120 euros, you know, it's dynamic pricing. I think with that and having, you know, all the amenities, make it compelling for our guests to be there. Secondly, other than that, we look at obviously the financial viability of the country. You know, how much is the cost to build? How much can we sell the units? And a lot of that also has to do with how long it will take us to build, because we need to scale very fast. In some countries, we know it's going to be 2 years before we get a building permit. You know, in some countries, the partner already has a building permit, which we can convert in 6 months. And so a lot of times it's about capital allocation, right? Because it's not unlimited capital no matter where you go. So you need to be able to allocate, you know, how the money that you have so that you can open the hotels much quicker. And with this, we can roll into franchising more faster and more joint venture partners. So it's really more of a scaling game. Yeah, so those are really the key things that we look at. And of course, the last is demand. The demand from the local market. Although we have sales offices all over the world, and we are starting to cross-sell, allow people to globally diversify their real estate portfolio very quickly, not needing to go to that city or country because all of the rooms are identical, so it's exactly the same. We always need to see also local demand. Will locals eventually start to buy this product? And so those are the things, really the key things, other than the legal aspects, of course, of being able to do what we do in those countries.
Genail, Anna mentioned the local regulation. In a country I know I will have to wait for 2 years to have the authorization. This is something that you see often, you being France, UK, Germany. Could you give us a little bit of an outlook on that topic?
I would say having this European view in all countries, you need to wait minimum 6 to 9 months to get a building permit. And you have, so minimum 6 to 9 months. We have some countries like in France where you are usually saying that it is difficult, but not that much, because if you work in advance with local authorities, you have this kind of 5 months deadline. Then recourse might occur, but with local authorities, you have a deadline. That it's not the case in Spain, for example. You also need to take into account that in some cities in Europe, you have some moratorium in Amsterdam, in Valencia now,
Barcelona.
in Barcelona. So this is something you need to take into account when you are studying project. And that's why I think you do need to partner with local developers that know perfectly the country, the regulation, and that can work with you. To make sure that you have been convincing local authorities, you have worked with the neighborhood to explain your project. So I would say minimum 6 to 9 months in all the countries in Europe, but you need to work with local partners.
Archer, do you want to add something, or Sami?
Yeah, I think working with local partners is a key thing, and definitely in our growth across the 16 countries, we always took touch with local partners. I mean, because it's the entry door to get a building permit, but also the entry door for the management of the hotel to recruit some local staff and be able to provide finally to our guests the best services and the services adjusted to the country and what is expected in terms of services. I mean, we also are flexible in terms of the brand standards to adjust our product to the local demands. So, yeah, I think working with local partners is just a mandatory, I would say.
If you wish. No, you good?
No, I was just to complete that. There is a current trend because of the office sector suffering at the moment of reconversion, and it is really a question of timing and momentum because we at BNB we are doing more and more of those, converting an office building into a hotel. They usually have a great location, a great catchment area, and working with the municipality is easier in that case and in the time being because those assets are empty or are suffering as a office asset, and with a hotel you are bringing employment, you're bringing activity, and that usually is easier to convince the municipality, but within the timing that you mentioned.
So if I have to sum up, you have to be an expert, an extra expert, and be very, very, very patient to develop through Europe. Would you share with us, please, some of your growth and activity forecast for the year 2025? Because we are living the certainty areas and everyone has to make an assessment. Sami, as you have the mic, you may start.
Are you talking about us at BNB or for the market in general?
You at BNB. For
Us
the
at BNB.
market, you just have to ask MKG, of course.
Yeah, sure. At BNB, as I said earlier, we are very implanted in Europe, where we have most of our portfolio. So we know there are still some white spaces everywhere in Europe. We have 450 hotels in France, and we are aiming at adding 200 on that. We have 250 in Germany, and we are aiming at adding again and to reach the 400 at some point. Italy and Spain, we have respectively 80 hotels, and it's a country where we are focusing right now because also of the good performances of our hotel and of our concept there, and it's also a market where there is a very low chain penetration, and BNB has already made its proof with a good track record there. In Spain, we have 65 hotels, and we are aiming at 125. And there are the other countries. You mentioned earlier the peaks are the Portugal, Ireland, Greece. So those are the other countries that we could aim at in the future. But in the present time, we are also focusing a lot on the UK, where we want to expand rapidly, and the US, where our partners will be different in this zone. So we need to find new partners, and this takes some energy from the whole team to create a good partnership with some of them. We've already convinced on the 4 hotels that we have some investors, one from France and some others from the US. And yes, the idea is to grow there, starting from Florida as a starting point.
Arthur.
So yeah, at Adagio, clearly we want to develop at least and sign 15, 20 hotels this year. I've got a full team dedicated for that, so they are all under the tent today. So we've got someone in charge of Iberia, we've got someone in charge of UK, we've got someone in charge of France, also DACH region. And yes, we are clearly looking for every opportunities and every scale. So the ambition, once again, in the next 5 years, is to achieve 200 properties across Europe. So strong ambition, nice deals to do, and yeah, quite some good opportunities. So we are all here to talk about opportunities after all.
Yeah. Well, Arthur, just 1 second.
Tell me.
You told me about growth, but
Yeah.
performances forecast, what does that mean? That you remain really optimistic on that topic?
Yeah, I'm strongly positive about the performances, especially on the extended stay market. Why? It's just because we are facing I think Airbnb, which was our best competitors on the market, to don't name it, is now facing some regulations in few countries and also in few cities with moratorium, etc. And I think that the services that we provide is an apart hotel. So every studio's 1-bedroom apartment and 2-bedroom apartment, likewise Airbnb, plus services that we provide. We've got a reception open 24/7, and also we've got all the services that an hotel can provide whenever you want. So the performances will stay in our forecast in 2025 good. I mean, at the same stage of 2024, which was a very nice year. And if nothing happened on the we're in the geopolitical, etc. I'm pretty confident.
Genaël.
So in 25, we have, I would say, in terms of developments, 3 main challenges. First, the opening of the 3 new assets in Spain. For us, of course, we need to make sure we deliver on time and on budget, which is the case. Second topic, of course, is to sign new projects, and we have strong ambitions with, I would say, approx 8 hotels to be signed this year in Europe, in the key markets I mentioned. Third one is this year we will relaunch Easy Hotel franchise that we put on hold 3 years ago when we joined the company with the management team, because we wanted to have a new product. That is the case now, a new design. We wanted to increase direct revenue. We wanted to have a new app. So a lot of work has been done, and we consider we are now ready to relaunch franchise at Easy Hotel. That will be the case this year. In terms of performance, just a few words. We are quite confident because of the opening in the stronger market. So for us, 25 will be a positive year.
Well, for us, we're expanding globally. With our listing in the NASDAQ this year, we expect to be able to grow the portfolio 3 times. So we're looking at about 10 to 12,000 new rooms, new keys across the world. About 1/3 of these will probably be in the European region. Right now, we have about 5 countries that we have talks with in joint venture local partners in those countries in Europe, which we hope to sign fairly soon.
Hélène.
For ON Hotel, we want to develop as an independent operator for private investors. I think we are a good option. We know the Parisian market perfectly, so we have advanced discussion with those kind of investors. And on the investment part with the fund, I think the objective is just to do really good deal, and not the numbers, but the quality of the deals. So we'll see.
Okay, we are now going to do a little step aside and talk about one more thing with Alexandra Libes from Best Western. Alexandra, at Best Western, you are developing something quite interesting for the hospitality industry. Could you share it with us?
Yes, of course. Thank you very much to make a little place for me. I'm Alexandra. I'm a Deputy CEO for BWH Hotels Group. This is an international group, and I'm in charge of development for France and Morocco. This group, BWH, that you maybe better know as Best Western, includes 18 brands from the economic to the upscale segment. And we have 4,000 hotels in the world, 1,200 hotels in Europe, and 325 hotels in France. One of the main features of our group, and something which is a strong marker, is that we are a membership organization. That means that the objectives for us is to create value for our owners that are our main shareholders. And in this context that we are talking about, with a lot of hotel assets that are for sales on the market, prices are actually quite high, interest rates also. And this is due to gross profit that are good, and which is actually a good news for our industry, as the performance are good. But this is something for our members and hotels owners. It makes a climate where it's become sometimes difficult to finance new projects. And what we are aiming to do is trying to find solutions to help our members to finance new projects. So we decided to create an investment company in partnership with our owner and project owners in our group, so as to help them finding bank financing and giving confidence in different financial partners.
No, I was about to ask you, where does that idea come from?
So it's something that we could observe in different membership organizations in different activity sectors, such as retail, pharma, construction, and it is something that is existing for many years and working very well to develop brands for the group and to help the members to grow. And so we are actually creating this company in partnership with the members that are willing to participate. We invest as a group, they invest as private investors. And we want to develop our brands with this company in being all the time in the minority. And we want to offer a diversification of financial tools like either bonds or stocks or both. And we have a particular attention paying in the dilution because we want our members we want to help them to find bank financing. And in fact, we are willing to create value directed to them and giving them tools to create it by operational support.
And what are the first results of those?
We are actually establishing the company. We are in a subscription period, and we are at the same time looking at different opportunities and assets with the objective to realize the first operation this year. And we begin like that, and then we'll see how it goes. And we have really this objective to help financing.
Do the owners respond positively to the opportunity to take part of this company?
Yes. In fact, a lot of them manifest a lot of interest in investing some participation into the structure, and in a membership organization, it has a lot of meaning, and they are quite enthusiastic about that. So we are looking about the opportunity.
So long life for this partnership among the network. Do you have questions for the ladies and gentlemen that are with us? It's now or never.
Hello, everyone. My name is Kaan. I'm a property developer based in London. I think my question goes to all, because all of the guests have been speaking perhaps positively about expanding in Europe and
keep your mic really.
UK.
Yeah, thank you.
So I'm wondering, what do they see as the biggest risk or challenge that could, damage the occupancy rates or the, market itself?
Who is willing to try this one?
It's a vast question because actually the international geopolitical climate is such that probably this would be the biggest concern that we should have right now, especially since investors are very cautious when analyzing an opportunity of investment, and so are our partners, and they are looking precisely at each risk for each country. And some countries that may be, I don't know, close to Russia at the moment, maybe on a higher risk of political instability. We've seen that with Ukraine, obviously, but so I would say that would be the biggest risk right now. Otherwise, and Anna mentioned it earlier, Europe is very safe as a investment destination and very secure, and so usually the investors they find a very good risk-return ratio and a stability. Right now, probably there is a question to be asked on the stability.
I think a big factor for that as well has been the last few years of very high interest rates. And so you've seen a lot of investments put on hold in the last few years. And so there's a bit of a shortage of supply of new hotels, especially in highly touristic areas. And you've seen like the demand come and surpass pre-COVID, yet the last few years, hardly any hotels have really been expanding. So now people are catching up, and more hotels are being built. So we are temporarily enjoying, I guess, very high interest, high occupancy environment until the supply catches up with the demand.
Do we have another question? No, I think we're good. Well, thank you, everyone. See you there at 3:30 to talk about leisure investment. Thank you very much, ladies and gentlemen.
Thank you.